Get ready because I'm going to share with you the top 3 highest yielding stocks currently on the NASDAQ 100. Let's start with the third one, which is American Electric Power Company. This major utility company generates and distributes electricity across the United States. It is traded on the NASDAQ stock market under the ticker symbol AEP. The company serves millions of customers across 11 states, providing electricity through its extensive transmission and distribution network. AEP primarily generates electricity from a diverse mix of energy sources, including coal, natural gas, nuclear, and renewable energy. The company has been actively transitioning its generation portfolio towards cleaner energy sources. It has set goals to reduce carbon dioxide emissions and increase its renewable energy capacity. Investing in American Electric Power Company stock allows investors to gain exposure to the utility sector and potentially benefit from the company's stable revenue streams and dividends. American Electric Power Company has a market capitalization of $43 billion and each share is valued at $84. The company has a remarkable track record of increasing its dividend for the past 13 consecutive years, resulting in a dividend yield of 3.92%. This yield is more than twice as large as the S&P 500. While analysts have given the stock a hold rating with a potential upside of 17.4%, further investigation reveals that insiders have been selling the stock, holding only 0.12% ownership. Additionally, institutional investors are also selling. In my view, AEP is a stable dividend payer with most of its business being regulated, and a 65% payout ratio, leaving room for future dividend growth. However, in short-term price appreciation, I'm not sure about its direction. But as a long-term dividend investor, I'm not scared by short-term volatility. AEP is a high-quality stock that aligns with my dividend growth portfolio, but currently I don't hold any shares of the company. Moving on to the second highest yielding stock, we have Kraft Heinz. As one of the largest and most well-known food and beverage companies globally, Kraft Heinz is recognized for its popular brands like Kraft, Heinz Ketchup, and Oscar Mayer. The company has a market capitalization of $46 billion, with each share valued at $37. Kraft Heinz has a long-standing tradition of paying dividends to its shareholders. However, in 2019, the company reduced its quarterly dividend to 40 cents per share and has not increased it since then. This translates to an annual dividend of $1.60 per share, resulting in a dividend yield of 4.34%. This yield surpasses the industry average and is appealing to income-focused investors. Analysts have assigned a hold rating to the stock with an upside potential of 18.7% and a price target of nearly $44. On the inside front, Kraft Heinz insiders are also selling the stock and hold a combined ownership of 0.32%. However, in contrast, institutional investors are buying in, collectively owning 69% of the shares. Although the high dividend yield catches my attention, I am not entirely confident in the bright future of the company. As a result, I do not currently hold any shares of Kraft Heinz, nor do I plan to acquire them in the near future. Let's now turn our attention to the stock with the highest dividend yield on the NASDAQ 100, Walgreens Boots Alliance. Walgreens Boots Alliance Incorporated is a multinational retail pharmacy chain that operates an extensive network of over 18,000 stores across 11 countries. The company was formed in 2019 through the merger of Walgreens and Alliance Boots. With a market capitalization of $27 billion, each share of Walgreens is currently valued at $31, which is over 50% lower than its value 5 years ago. The company has a remarkable track record of paying dividends to its shareholders. Since its formation, the company has consistently increased its dividend payment every year. Currently, it boasts a dividend yield of 6.11%, which is more than 3 times higher than the yield of the S&P 500. This dedication to returning value to shareholders through dividends and share buybacks has made Walgreens an attractive choice for income-seeking investors. The number of shares outstanding has decreased from 1.03 billion in 2017 to 863 million presently. Similarly to the previous two stocks, Walgreens Boost Alliance has a hold rating, but the upside potential is substantial, standing at 35%. One encouraging sign is that insiders are buying the stock, collectively owning 17.5% of the shares. This high level of insider ownership signifies confidence in the company's future. Institutional investors are also increasing their stake, holding a combined ownership of 57%. In conclusion, Walgreens Boost Alliance is a well-established company with a long history of paying dividends to its shareholders. The company has increased its dividend for 47 consecutive years and maintains a low payout ratio of 47%. This consistent dividend growth demonstrates financial stability and the ability to provide value to shareholders. Furthermore, the recent investment in technology and digital capabilities are expected to fuel continued growth and deliver value to investors. Personally, I currently hold shares of Walgreens and plan to acquire more at its current price. And there you have it, the top 3 highest yielding stocks in the NASDAQ 100, along with my personal take on them. Remember, it's always important to make your own research before making any investment decisions. Thank you for watching and don't forget to like the video. See you soon, bye bye.